So let's get right into it. NVIDIA just dropped a quarter that looked, well, pretty much perfect. Record numbers, crushing expectations, and the stock still took a hit. So what is going on? Is this the buying opportunity we've all been waiting for? Or is this the first little crack in the AI armor?
This is the chip market.
All right, first up, let's really dig into just how monstrous this quarter was. But we also need to look closer at the subtle signs that the market is obsessing over.
I mean, just look at this number. $57 billion in revenue for one quarter. That's a jump of more than 62% from this time last year. You just don't see growth like that from a company of this size. It's almost unheard of.
And if you're wondering where all that cash is coming from, well, here it is, the data center business, the absolute engine of their AI dominance. It exploded, up 66% year over year. Think about that. This one single division is now nearly 90% of the entire company.
And it's not just that they're selling a ton of chips, it's how much they're making on each one. Their non-GAAP gross margin hit an incredible 73.6%. That tells you they have insane pricing power. Customers are lining up to pay whatever NVIDIA asks.
Okay, but this is where the story gets a little more complicated. That 62.5% annual growth is obviously mind-blowing. But if you look at the growth from just the last quarter, it's moderated to 22%. Now that's still amazing, but for a stock priced for absolute perfection, even a tiny hint that the rocket ship might be slowing its ascent, that's enough to make people nervous.
But then you have this, the counterpunch from the bulls. Management just casually mentioned they have visibility into $500 billion in orders through 2026. A $500 billion backlog? I mean, that's bigger than the economy of some entire countries. It suggests this demand isn't just a flash in the pan. It's a tidal wave with a long way to go.
So here's the bottom line for this section. The business itself, it's an absolute fortress. The fundamentals are rock solid. The real risk here isn't the company's performance. The risk is the mountain of expectations the market has built on top of it.
So how on earth do you get a sell-off from numbers like these? This is where we have to talk about the psychology of the market, which can sometimes feel completely disconnected from reality.
I mean, just look at the trading day. It was pure whiplash. The stock is up big before the market even opens. It keeps climbing, up more than 5%, and then a complete U-turn. It ends the day down over 3%. A swing that wiped out billions in market cap in just a few hours. And this really frames the battle perfectly. It's a total tug of war. On one side, you have the hard facts, record revenue, incredible margins, strong guidance. But on the other side, you have fear. Fear of the massive valuation, nagging questions about whether customers are actually making money on these AI investments, and frankly, people just wanting to lock in their huge profits.
And this wasn't just a random panic. This sentiment was already out there. You had some of the few bears on Wall Street, like Seaport Research, saying, hey, it's getting harder and harder to keep this up. They were planting those seeds of doubt even before the report came out.
So really, the sell-off was a perfect storm. You had some bad news about the broader economy that day, which got the ball rolling, but what really fueled the fire were those bigger, lingering questions about the long-term AI story. It was macro fear meets micro uncertainty.
Okay, now let's talk about the competition. Because you can't talk about NVIDIA without talking about AMD. But we're not looking at AMD as some kind of NVIDIA killer. Not yet. Instead, let's think of them as a critical stress test for NVIDIA's future.
First things first, let's just ground ourselves in the here and now. In the market for high-end AI training chips, the really powerful stuff, NVIDIA is the game. They've got over 90% of the market. It is, for all practical purposes, a monopoly.
And this table just lays it all out. NVIDIA's data center business is more than 10 times the size of AMD's. It's not even close. But look closer. AMD is growing. And now, look at that gross margin number. That gap between NVIDIA's 75% and AMD's 52%, that's the whole ballgame. That's the premium that real competition puts at risk.
And look, AMD is being incredibly smart here. They're not trying to go head-to-head with NVIDIA's best chip. Instead, they're finding a wedge. They're targeting inference, which is basically using the AI model after it's been trained. They're telling customers, hey, we can do that job for 30 to 40% cheaper, and it's working. When you land a partner like OpenAI, it sends a signal to the whole market that you are a legitimate, viable alternative.
So let's be super clear. AMD's progress doesn't mean NVIDIA is going to fail. What it means is that the days of NVIDIA having the playground all to itself are numbered, and real competition almost always means pressure on prices, pressure on those sky-high margins, and a serious test for that premium stock price.
All right, let's pull this all together. If you're a long-term investor, what do you do with all this information? Is this sell-off a gift-wrapped opportunity, or is it a classic value trap waiting to spring?
It really comes down to two very different stories about the future. You have the bull case and the bear case. Which story you believe is going to determine how you see this stock? Let's walk through both.
So if you're a bull, you're looking at that $500 billion backlog and sleeping very well at night. You're seeing demand spread out from just the big tech giants to countries and other industries. You're pointing to NVIDIA's CUDA software as a deep, powerful moat that's almost impossible for competitors to cross. And you'll say, hey, the valuation is actually more reasonable than it was last year.
Now the bears, they're going to ask some tough questions. They'll ask, are the customers buying all these chips actually making any money from them yet? They're going to point to $110 billion in vendor financing. That's basically NVIDIA loaning money to customers so they can buy NVIDIA's products. That's a risk. And they'll keep hammering on the rising competition and the fact that a handful of customers still make up so much of NVIDIA's sales.
So, when you cut through all the noise, the hype, and the fear, this isn't an emotional decision. It's a strategic one. It's about deciding which of these two stories you think will define the next chapter for NVIDIA and the entire AI industry. If you found this breakdown useful, like the video, share your thoughts in the comments, and subscribe to the Chip Market for investor-grade semiconductor insights.